One of the questions I get a lot from my borrowers, it's not just first-time home buyers, but everybody is, what is PMI, private mortgage insurance? Hi, I'm Dave Kammerer with the Dave Kammerer team at Summit Funding. And private mortgage insurance basically is an insurance premium that is paid by you, the borrower. It insures a portion of the purchase price, or loan amount rather, but it's the purchase price actually based on the purchase price. And it gives that subsidy to the lender in the event that you default. Now, here's what it does for you. It allows you to buy a home with less than 20% down. At the point that you put 20% down payment, private mortgage insurance is not required. Now, here's the neat thing about private mortgage insurance is it's an extra finance charge. So that is tax deductible in most cases. It didn't used to be, but it is now. Another thing about private mortgage insurance, depending on the characteristics of your loan and what your borrower profile looks like, it's rather inexpensive, sometimes surprisingly low. It can also be applied several different ways. The most common way is it's added to your monthly payment. But there are some other ways. Sometimes you can pay it as a single premium up front. Sometimes that single premium is refundable if you sell the house in a certain period of time. That's rather uncommon, but that does exist. And then there's something called a split premium where you pay a little bit up front and then you also pay less per month. So we look at all those options and figure which one is the best. The last one is where it's built into the rate itself. What I don't like about that one is you're paying that rate for the life of the loan, and they don't really factor in that amortization piece. They're betting that you're probably going to have that loan for 8 years instead of 30. So if you keep it a long time, sometimes you can overpay for the mortgage insurance. No matter what, we ask a lot of questions and we figure out which one's best for you. But you'd be surprised how inexpensive it can be sometimes. And it just depends on your profile, like I said. So that question gets answered a number of different ways. One last thing I'll add is that I come from a long background, over 30 years in mortgage, and there was a time in the mortgage business where private mortgage insurance was just a flat rate and it was the same for everybody, and it seemed like it was unfair as a finance charge. And so a lot of people who've been around a long time, here's what they remember is the bad news about private mortgage insurance. The industry has been revamped, has been for a long time, and in fact, it's actually a bargain. And here's, again, what it allows you to do is pay less than 20% down. And if you don't have the money, of course, that's something that's helpful. But even people who have the money to put 20% down, they take a look at the cost of that mortgage insurance. They take the difference of what that cost them and then the money that they would have put down. What are we going to do with that money instead? Maybe it's invested over here. Maybe they had to pull it out of the stock market and take a capital gains hit or something like that. There's so many reasons why you might consider it. So if you're curious about it and you want to learn more about private mortgage insurance, get a hold of us at the Dave Kammerer team at Summit Funding. We'll educate you on your specific situation and help you with some general questions as well. Thank you, and I hope this helps, and have a great day.